see here. How many of us have had a challenge with a borrower who had challenged credit or had bad credit? Show of hands. Okay. How many of us have had a difficult time closing a loan because a borrower didn't have sufficient income? Right. How many of us have worked with borrowers that are at least 62 years old recently? What if there were a way to work with folks and not worry about their income and not worry about their credit? Would that help? With those eyes.
Yes.
Well, I want to start with a little statistic for you to keep in mind. According to AARP, in 2011, the first group of baby boomers, and baby boomers are defined as those folks that were born between 1946 and 1964. In 2011, the first wave became what we would consider eligible for retirement. It became 65. We became 65. And from that period forward, we're going to have 8,000 per day turn 65. 8,000 per day. What does that mean to you and me?
Lots of sand.
Yes! That's exactly right. It means that this is a group of folks that is huge. It is the largest living generation. So, if you didn't have to credit qualify these folks, or income qualify these folks, do you think you might be able to sell a few more houses? Yes?
Yes.
Yay! All right, so let's talk about the HECM. What the heck is a HECM? HECM stands for Home Equity Conversion Mortgage. It allows seniors, and what's a senior? It's defined as anyone that is 62 years of age or older. I'll soon be a senior. I just got my AARP card. That was interesting. This allows for folks to buy a home with a mortgage and not have a mortgage payment. So you can borrow to buy these homes and not have a mortgage payment. We'll go into the details, but if at any point you have questions, please raise the hand and we'll address it. So, special features. A HECM is an FHA mortgage, so it is heavily regulated. It is insured by HUD, and if you're have any of us done FHA mortgages or closed loans with FHA mortgages? Most of us. Okay. So many of the same requirements for a forward mortgage are required for a HECM mortgage. The property condition, and in addition to that, there's some counseling that's required for the HECM mortgage. Questions thus far? No? No? Okay.
I have one.
Yeah,
It's
please.
just for home buyers 62 and older.
Yes. Yes.
have to be.
That's one of the qualifying features. It must be for folks, the youngest of the two must be 62, if it's a husband and wife, and it must be a primary residence.
Is this like a reverse
Yeah.
mortgage?
That's exactly what it is. It's a reverse mortgage. They're called home equity conversion mortgages. It is a reverse mortgage, correct. Yep,
So
good
what's
question.
the difference if it's a reverse mortgage?
Well,
What differentiates the HECM?
It is an FHA insured loan, and it is the only reverse mortgage available now. So back before the real estate crash, there were a lot of private reverse mortgage servicers and originators and products. Not so anymore. There's only one at the moment, HECM. And again, it is an FHA loan. And the benefit there is that counseling is required. It is very heavily regulated by the federal government. So it's designed to address a lot of the concerns that some of the nightmares we heard back before the crash were prevalent. So again, no credit score requirements. So even folks that have challenged credit can qualify for this. There's no income requirement because there are no mortgage payments. Lower upfront investments than a cash purchase. So how many of us have had folks that are moving here from the Northeast or the Midwest and say, gosh, I just sold my home up there and I have $200,000, I want to buy it in cash. So cash market has been pretty good, right? Yeah. Have any of those cash buyers been 62 or older?
Yes.
Yeah. So what if you could say to them, you know what, you can buy a home and still not have a mortgage and invest the other 50% in whatever it is, a rental property. So you could have them buy a rental property, so you have 2 sales with the same money. Consider that. You buy an investment property that is going to help their cash flow, and their primary residence, they don't have to make a mortgage payment on. Okay. Peace of mind. Here's a big one that I get a lot of questions on. I think I'm on page 6.
Not numbers.
No, the page numbers? Okay.
Just show us the
It
picture.
says, yeah, peace of mind.
Other unique benefits.
Okay, unique benefits. Control. Borrower retains home title. I've been asked a lot, and I've done a few of these, and folks say, well, gosh, doesn't the bank take ownership of the property? The answer is no. This is a loan. It's a mortgage loan. The buyer and the borrower retain ownership. They can sell if they decide to sell. They can refinance out of a reverse mortgage if they opt to do so. It is a mortgage, so ownership stays with the buyer. That help?
What's the loan to value per age? I mean, somebody could be 70, somebody could be 80, the loan to value is different.
Yes, it is. Great question. And it is on a sliding scale, and the loan to value is going to be anywhere from 50 to 70% depending on the age of the buyer and the borrower. So the younger we are, the lower the loan to value. So if I'm 62, chances are I'm going to be somewhere around 50% loan to value. As I progress in age, I can have a higher loan to value. But range
You
between
mean
50
I
and
can,
70.
like if I'm like 80 or something, I can have a 30% equity instead of 50% equity?
Yes, ma'am. That's right. Yep. Yep. Good question.
Is there a scale for that somewhere?
We can go online and we can input all the data, and part of it is going to be who the youngest person in the household is, the value of the home. So we can go online. There are online calculators, and if you have a specific situation, then just give me a call, put in the data, and put together a proposal for you.
Is there a place that, as us, as agents do that rather than not calling you, just if we needed to know quickly, just on your site or something?
The answer is yes, and if you, I'll give you cards. I don't have any with me. I'm sorry, but I'll give you my card. Just send me an email, and I'll return with the link that you can actually go on. Just plug in the numbers. Fair? Good question. Homeownership. Here's something that's also important. Let's say that I get one of these home equity loans. Well, let me back up just a second. So let me give you a quick example of 2 clients that I helped recently. One gentleman was in his mid-70s, and he had a first mortgage and a second mortgage, and he said, hey, I'm interested in this reverse mortgage. Talk to me about it. And I said, well, the first thing you really want to do is discuss this with your family, discuss whether they're expecting to inherit a home or any of that. I said, no, already talked to my kids, we're all fine. I just want to get out of making mortgage payments. We refinanced his home with a HECM, and got rid of his first mortgage, got rid of his second mortgage, had a little bit of money available for him to use, and he has no mortgage payment. The guy's extremely excited.
Brenda,
Second client
move that.
owns a property free and clear, getting ready to retire. And her financial planner suggested that we speak. We spoke, and she has been self-employed for a while, didn't put a whole lot of money aside. Social Security is going to help, but it's not enough. She has this property, this home, that's free and clear. She's not taking any money out today, but she's locking in at today's rates. She can draw money out as she needs it to bridge the gap between now and the time that she starts receiving Social Security. Keep in mind that the older we are when we start drawing Social Security, the higher the amount we get from Social Security. So this again is a great option, especially for folks that are thinking, gosh, may not have saved enough money. But on the flip side, for a situation where you're having buyers that are saying, you know, I'd really like to buy a home. This is an option, an arrow in your quiver that perhaps you didn't think about. Fair? Question so far? Yes.
Another potential candidate is somebody who's moving from an area with lower home values,
Yep.
and they want to move, just had one, Stephanie helped me with that, and I was educating them because the price point was close, and they were having a hard time getting something within the cash that she'd made out of her previous sale.
Yep.
And, you know, I said, well, you like these homes that are 30,000 more, you could do
Right.
this type of a mortgage. We ended up finding one in her price point, so she was able to do it without that. But there's a lot of people that are moving out, want to move out of an area to another area where the prices are a little higher, so it gives them an opportunity to do that if they're old enough.
Correct. And on that note, another thing to consider is perhaps someone owns a bigger home even here and is wanting to downsize. Maybe they own a 2-story and, you know, the stairs are just getting to be too much. I mean, my knees are aching. They want to move into something that's a little bit smaller and has a little bit less maintenance, and they have a lot of equity in that home that they own. Well, perhaps they can rent that one and buy a new home and use an home equity conversion mortgage to buy the new home. So now they have rental income and they don't have a mortgage payment. This product is not for everybody. It is a tool that you might just consider putting into your toolbox, so whenever you have a situation where, gosh, this might work, just think of me, and I'm happy to walk through it, and maybe it'll work. So as we were chatting just a little bit ago, it allows folks to leverage. So we're on the page where it says, how can your clients use a HECM, and with 140,543. So here's an example of someone who has about $140,000 available for the purchase of a home, and they're buying in a market where the homes are higher. Well, they can either find a home for $140,000 and pay cash for it and have no mortgage payment, or leverage those $140,000 with a HECM loan, buy a $300,000 home, and still not have a mortgage payment. Huh?
Wow.
Did I hear what?
Wow.
Wow.
Oh, wow.
Yeah.
Huh.
So this continues with some ideas of, you know, the right size or smaller to lower maintenance. There are multiple reasons why folks want to either move or downsize, to be closer to family. As we get older, we want to be closer to family.
So what happens to the balance of that when they pass?
Good
We
question.
get into that?
Good question. Yes, we are. And here's the thing. So this is a mortgage. It's not free money.
Right.
It is a mortgage. So what's happening to that loan is it is a deferred. It is the balance that is owed continues to grow. So the question is then, well, gosh, what if I decide to sell and the market has tanked and I owe more than the house is worth? Right? The heirs or the borrower will never owe more than the market will bear. There's a mortgage insurance. It is an FHA loan, so there is a mortgage insurance premium. That mortgage insurance will cover the shortfall. So if the house is underwater, the heirs or the will never have to pay more than the house is worth. Does that answer the question?
Yeah.
Wow.
Yeah.
Yeah. So you will never have to take money out of pocket. It is a loan, so you're living in a property, you borrowed the money, and the bank is going to get paid sometime. But the seller of this property, the heirs or the owner, will never have to take money out of pocket to dispose of this home.
So that's why you said, have you discussed this with your children?
Correct.
Because once you pass, then the responsibility falls onto them to
Sell it,
whatever. Okay.
to dispose of it.
Right.
Correct, yes.
Okay.
Yes.
Now, is this fee for the loan put on the back end to be paid when the house sells?
Correct.
Because I know there's a pretty high fee for this.
There is a cost, yes. Well, one of the things, so let's talk about the white elephant in the room. The cost of this is a little bit higher than a forward mortgage. So if you compare the payments of a regular FHA loan, you will find that they are a little bit higher. Not a whole lot higher, but a little bit higher, yes. And it basically accrues. You will owe this money at some point. So as time progresses, you will owe this money. And again, let's say that we do it this year and in 3 years, God forbid, market tanks by another 30%. Now we have this asset that is worth less than the loan. What do you do? Well, again, the heirs will never have to pay more than the house will sell on market. So,
Now, you stated that there's a PMI insurance on it. Are they paying regularly for that insurance even when they take, I guess, possession of the home? So you said there's no mortgage payment, but they're still paying the insurance.
it is deferred. That means that
It's still deferred.
it's still deferred, yes.
Okay.
It is being accrued, so they're
Okay.
paying interest and they're paying that mortgage insurance.
Okay,
But it is not paid, it is paid when the house is sold.
okay.
But there's an upfront fee, isn't there?
There is an upfront fee,
How much
but it
is
can
that?
also be financed.
That could be financed as well.
Yes. Yep.
So what do you
is the
pay?
percentage?
What do you pay every month?
Nothing.
Well, you have to, if you're buying a home, again, in a situation where this gentleman is 71, this is an example of purchasing a property at $300,000. What they need is $140,543 for equity, and that's it. Yeah. Good questions. And if you need specific examples, please call me or let me know, and I'll send you a tool that you can actually go and do the calculations. Other questions? Right size, sell their home. Well, again, we discussed some of the benefits. Sell your home and purchase next door. Enjoy carefree living. The 55+ community. Again, a lot of folks are moving down from other places, have a bunch of cash. And many of us think, gosh, I'll figure out how to make more money to live on. But if you don't have to, if you can use half of the money for the home and not have a mortgage payment and keep some money to live on, doesn't that alleviate a lot of concern and a lot of burden to the family members? Mm-hmm. So, food for thought. Some of the specifics: the borrower, the youngest title holder, must be 62 or older. It must be a primary residence. There cannot be other mortgages. 1 to 4 unit property. So this works for duplexes as long as I'm going to live in the property. So good option there. I'm going to leave this with you, and I'm going to run down and get some cards. And I welcome your calls and your suggestions. Here's another one that you might consider. For folks that